Welcome to Short View Trading. My name is Chris Watley. I'm the CEO and founder of the Daily Rag Trader. This is your morning market hit for Monday, 8th of April. It's around 9 a.m. London time. So what matters for markets if you want to trade them on a 1 to 2 week basis? If you want to trade equity index futures, S&P500 futures, NASDAQ, FTSE, DAX, what should you think about? What are the factors you need to take into account as you go about making a decision whether to go long or short on that 1 to 2 week basis? And of course, the first thing you need to think about is the context of the market. How's it trading? Because last week was a tougher week. It was a tough week for US equity markets. The S&P, the NASDAQ 100 were both down around 1%. Small and mid-cap indices were down even more, as you can see in this chart of weekly performance of key US equity indices that we're putting up in front of you now. Russell 2000 down almost 3%. Mid-caps, small caps down around 2.5%. So it was a tough week in the States. It was also a tough week over in European markets. The DAX has been rolling over of late. Look at this chart, candlestick chart of the DAX that we're putting up in front of you now. And similarly across much of Europe, it was a tough week, as it was in Asia. And of course, all of that raises questions about the trend in the equity market. Look at the S&P 500 chart we're putting up in front of you now. This is the index, the main US index, shown with its 10, 50 and 200-day moving average. All of those in recent months have been very clearly trending up. But in the last week, what you've seen is the S&P start to break the first of those trend lines, the first of those moving averages, the 10-day moving average. You can see last week it broke notably below that 10-day moving average and is starting to question the uptrend. It's the beginning of the questioning. Is the equity market consolidating its gains, or is it now rolling over? That's the question you've got to ask if you're a 1 to 2 week trader. But equally, you could also look at this candlestick chart if you're into technical analysis, this candlestick chart of the S&P 500, and it shows you quite clearly that the S&P 500 found some fantastic support on the back end of Thursday into Friday's trading session around that 5190 level. You can see the market rallying nicely from that level on Friday despite a strong payrolls number and all the chat about no rate cuts, etc. over in the US from the Fed. So the debate is out, the jury's out. Is the market rolling over? Is it breaking key uptrends? Or is it just consolidating its gains? And of course, throwing into the mix of that debate is what's been going on with the oil price. You can see WTI futures up around 4.5% last week, up about 20% year to date. The oil price has been pretty strong, pretty marked uptrend, of course, driven in large part by the geopolitical tensions that we see over in the Middle East with the Iranian-Israeli tensions building over recent weeks and adding to the pressure on the oil price, and therefore concerns amongst market participants that the oil price is going to cause some challenges for the equity market if it continues rising like this. So there's a lot of concerns out there at a time when the market may be rolling over, may be consolidating its gains. And all of this raises questions about how do you go about trading this equity market when you're thinking on a 1 to 2 week time frame, that swing trader time frame when you want to trade equity index futures like the S&P 500. And for us, the answer is not only thinking about the context of the market, but almost more importantly, think about where the short-term models are. What are short-term technical models saying? What are short-term risk appetite models saying? And what are our put-to-call downside hedging models saying about the market and about the positioning in the market? Is it overbought or oversold? Have market participants become greedy? Is risk appetite high? Or have they become fearful and risk appetite sold off and generating a buy signal? And indeed, are investors and traders hedged to the downside or overly exposed to the upside? Those kind of questions we ask each and every day, and we use models like this short-term market timing technical scoring system for the S&P 500 that we're showing in front of you now to help us judge whether or not you should be implementing long or short trades, or even just standing back and pausing. And indeed, the goal of this daily rag trader publication that we put out each and every day is to generate 1 to 2 week trades, either long or short, in the S&P index futures or similar equity index futures. So we use models like the S&P technical scoring system, our risk appetite models, put to call models, and a whole bunch of other models that we publish each and every day in our daily rate trader. And if you'd like a trial of that, simply click on the link below and we'll gladly send you the rag trader for free for 3 weeks. No credit card details required, just your name and email address. And then you can work out if it's helpful to your trading, complements your trading style, and adds value to the way you go about trading equity index futures. So over and above the models and the context of the market, the price action, what is it? What are the key events we're watching this week? Well, there's 4 key themes. Firstly, we've got an inflation theme. So we've got US CPI out on Wednesday. That'll be a big focus, core, headline, all the detail, the subcomponents, etc. And then we've got some inflation data out of China as well, CPI and PPI later on this week. That's the first key theme. The second key theme is China data itself. Over and above that inflation data, we also got the total social financing data. When you get the monthly lending data, M0, M1, money supply data, all that kind of bank lending data, it's really quite critical, tells you how much stimulus the Chinese are putting into their economy. That's another key theme. Then over and above that, we've got the ECB on Thursday with a press conference. It's their monetary policy meeting and their statement about their intention of what they want to do with interest rates. Are they going to start hinting at a cut? It'll be very interesting to listen to the language from Lagarde. It's softened a bit, become a little bit more dovish over the last couple of weeks. Does she follow through on that at the press conference on Thursday? And then finally, the fourth key theme is US quarterly earnings. The quarterly earnings season begins in earnest on Friday with the major banks reporting their earnings, JP Morgan, Citi, Wells Fargo, etc., kicking off on Friday as we go into the next few weeks of US earnings. So that's it from us. That's your morning market hit for Monday, 8th of April. Thank you for listening. Please do subscribe to these videos on YouTube. Simply click on the subscribe button and like and share on social media, or follow us on Twitter, LinkedIn, and or Facebook. Thank you for listening. Stay safe, trade well.